If you look at that skyline, what do you see? Tall buildings, offices, pretty lights. That's to the average person. But to me, these massive towers that you see are huge money losers. Like, we're talking about like 50, 60, 70 yachts, all just pretty much becoming money pits, right? We're looking at jets, we're looking at supercars, money pits, high maintenance, and you need to constantly repair employees to keep up with the maintenance. That's the same thing with super tall skyscrapers that we see in our offices. We're seeing the most infamous short seller, Muddy Waters, going all out, shorting the Blackstone Mortgage Trust, which, by the way, the Blackstone Mortgage Trust has a lot of those commercial real estate. All those tall buildings, tall offices, and malls that you see on the skyline, a lot of it is owned by the Blackstone Mortgage Trust. They specialize in commercial and office real estate, which is a really bad thing to see right now. They recently gave out dividends and was actually not that bad, but guess what? The dividends, according to the most infamous short seller on Wall Street, Muddy Waters, the dividends are going to be cut perhaps Q2 of this year, right? And Muddy Waters is also saying that MXMT, Blackstone Mortgage Trust, will be taking financial hits in the coming year. And the REIT is at the risk of a liquidity crisis. Now remember, Muddy Waters is not your typical small, neighborhood short seller. This is like a multi-billion-dollar short seller fund. And these guys are infamous because they win a lot. And they make big bets on just a few plays every few years. And they've pretty much done their research and they're targeting the big dog, which is Blackstone. Blackstone, BlackRock, Vanguard own a vast majority of our real estate here in the US. And with the Blackstone Mortgage Trust, if they go bankrupt and the collapse of commercial real estate, even housing prices will be going down. And remember, despite lower interest rates right now, not a lot of people are buying homes. In fact, with interest rates being so low, there's actually less people buying houses because some of them are pretty angry, they're protesting, but the vast majority of them are just broke. Like 62% of Americans live paycheck to paycheck. And a lot of these guys are making pretty good salaries. Like, 50% of people who make 100 G's live paycheck to paycheck. It's pretty absurd. So if you look at this, you got banks already facing a $160 billion loss on commercial office loans. This is immense, guys. And we're looking at 300 to 500 small regional banks in the U.S. having massive losses in the commercial sector. And $160 billion is no laughing matter. This is massive amounts of valuations being cut off. There is currently a 10 to 20% default rate on commercial real estate loans. This is around $80 to $160 billion in bank losses, according to like Stanford and some big universities. And not to mention, we're also seeing buyers negotiating and lowballing some of the sellers. I mean, imagine you bought a skyscraper like the AON Center for $250 million back in 2014. Okay, you bought this building 10 years ago for $250 million. How much do you think they sold it now? Surprise, they sold it for a measly $178 million. That is probably the biggest downtown office sale of 2023 and by far one of the biggest losses in LA real estate to date. We're looking at a $100 million loss despite the building was held for 10 years. Typically, when you buy real estate, they're very stable investments. It's not like crypto. It's not like an NFT. When you buy real estate, it's legit a whole entire building. And they bought it 10 years ago. 10 years of price appreciation led you to a price loss. That is something I've never seen before. In fact, if you go to like decent cities, if you go to Sydney, Hong Kong, Singapore, if you bought a building 10 years ago, you're guaranteed to make money. But of course, some locations like San Francisco, LA, and even places in Seattle, we're seeing people buying real estate a decade ago still lose money. And by the way, with all the money printing, I'm sure $1 million back in 2014 was worth so much more than now, right? Back in 2014, there was actually a cheeseburger menu. There was actually a dollar menu in restaurants. Now there isn't. The typical dollar now is just so much more worthless than before. And we're seeing losses after losses after losses. And Blackstone Mortgage Trust might actually be heading towards a liquidity crisis right now because 2024 is not kind to commercial real estate. Now, before you guys leave, check out the private Discord server, guys. 7-day free trial. and we're actually making a decent amount of money. We trade live every single day. So trade with us, guys. Make some money with us. We're making some pretty good cash. And look at this. Baidu made a quick scalp of 20%. Check us out.